exciting live breaking news. We have our first look at second quarter GDP. Will it be above 4%? Will it be above 5%? And the survey says 4.1. Now, granted, it isn't 5, it isn't 4.8, it isn't 4.7, but it's not bad. And our last look, it's upgraded from 2% to 2.2. So now it stands, if you start third quarter of last year to get 4 in a row, that was 3.2. The last quarter last year was 2.9. We just took that 2% first quarter this year up to 2.2. Now add 4.1. Personal consumption, whoa, much better. 4%. That is big time. That's sequentially following up 0.5%. And if we look at the price index, that's also hot. 3%. We're expecting a little over 2, and we're followed by 2%. Finally, personal consumption expenditure, quarter over quarter. This actually isn't as hot. It's 2%. Our last look was 2.2, and we were expecting 2.2. The response in the market actually is a bit of a disappointment on the knee jerk, but that's only the knee jerk. How can I tell? We've given up a couple of basis points on treasuries, but no matter how you slice it, it really isn't a bad number. And where does it comp to? I can tell you it's going to be somewhere in 2014, of course. The third quarter of 14 was 5.2. The second quarter of 14 was 4.6. Looks like the average here is going to be now firmed up a little bit. I'll do all the permutations and get back to you on this, Becky. Dollar index actually gave up a little bit of ground as well, but it's still up on the session. And everybody, of course, remembers 2 things or 3 from yesterday. Facebook got routed. The dollar had a nice pop. The euro dropped. And, of course, we continue to etch towards 3%. Becky, back to you.
Rick, thank you very much. Steve Liesman is here with more reaction to the report. And Steve, rapid response for CNBC, 4.1%.
Rapid update.
Exactly right.
Yes, right on the median forecast, wisdom of crowds. We take the tracking forecast, and it was spot on. It's been running better than the Atlanta Fed, which is my only metric because everybody else talks about the Atlanta Fed for reasons not clear to me. But none of that is neither here nor there relative to the importance of this number. It is a strong number. There's no denying that any way you bake it. The keys here, I think, are looking for what is fiscal policy and tax cuts and what is sort of one-off items. Let me go through a few of these here. Consumer spending, 4%, as Rick said, better than expected. A lot of the numbers that we're looking for north of 4, we're looking for 3% consumer spending growth. That's something of a bounce back from the first quarter. So I think you can say we're at a higher level, perhaps propelled by the tax cut, because there's a little bit bigger checks out there. You have more people working. Wages are up a bit, not doing too badly. That's a good number right there. Business investment, 7.3%. That comes off of an 11.5 number in the first quarter. So business investment doing well. You can expect that's from the tax cut.